Hello, everyone. This is Mark with Semantics Trading with your daily recap. So today we did see equities fall due to poor economic data and a weak outlook from Walmart, highlighting the effects of lessening demand from the consumer. The market still remains lacking direction overall, however, and there is no new trend being formed, and we are likely to stay range bound until key events this week have passed. And if we take a look at the VVIX, it does remain dormant as people seem to be refusing to pay up for downside insurance. According to Spot Gamma, 4,000 level on the SPX remains very important, as the recent rally from July's options expiration was due to short covering from puts decaying and implied volatility dropping. And it is very crucial for bulls to take control of this level right here at 4,000, or else it could slip into a negative gamma feedback loop, which will then awaken the volatility beast. The FOMC watch tool has a 75% odds of a 75 basis point hike this time, with a 25% chance of a 100 basis point hike. So the market is still pricing that in. And if you take a look at the Euro-Dollar futures curve, the Euro-Dollar futures are pricing in rate cuts in March of 2023. As you can see, the number gets higher as compared to the previous months. Essentially, when the Fed is expected to raise rates higher, the number gets lower. And when the Fed is expected to cut rates, then the number essentially goes higher. The Euro-Dollar futures is basically a proxy for the Fed funds futures expectations. If you take a look at December 2022 as well, it does not expect rates to be much higher, and this is pretty much saying that this is pretty negligible. And going on about the discretionary and tech sectors, I do think it is a bit early to be betting heavily on these sectors. Mind you, they are at very depressed prices where they are a really good value buy for long term. However, I would not expect any market outperformance, since I think a very key indicator for discretionary and tech to be outperforming would be for real wages to churn higher, as then it will be time for discretionary and tech sectors to be heavily bid. And at the current moment, we don't see that. We see the consumers are currently strapped for cash. Although fuel has come down a bit, fuel is only a small part of consumer spending, and it is only about 3%. So you would need to see other price pressures alleviate in order to see the consumer demand come back. If you take a look at the yield curve, we did go deeper into inversion territory, and it seems like the market is positioning ahead of an aggressive Fed. Although there's a dispersion of estimates across the market, that being said, that gives us a good and large portion of the market that has to reposition after Thursday's GDP number. And it seems like many people think, however, that the GDP will be better and will be positive. So they are positioning for this, hence the steepening of the yield curve, as if the GDP number is positive and it's not abysmal, then it gives the Fed more room to raise aggressively. However, this does not mean that this is necessarily correct. We do have Janet Yellen coming out on Thursday at the press conference, and that could be a sign that the numbers may not be that great. And hence, if that is the case and the number is actually negative, you may see the market have to reposition, and then you may see a potential steepening of the yield curve. But there is many what ifs and unknowns. So I would not necessarily be heavy betting on one side. Rather, I'll be very nimble and I would wait for all the data to come out. Then you could position yourself, as there is heavy event risk this week. And with that being said, that is it for today's report. I want to thank you all for watching. This is Mark signing out. And if you did like this video, be sure to subscribe and like our video. And be sure to check out our Discord if you're interested in a live commentary during the market hours, and as well as our Twitter and Substack for more newsletter and updates. I want to thank you all for watching and have a nice night.